Welcome to IVSA Chart Analytics, your best signals stock market indicators. IVSA Chart Indicators is based on the time-proven Wyckoff-Williams volume spread analysis. It tells you when you should be in and when you should stay out. No more second guessing. It features a stock screener that allows you to follow the smart money. You virtually get in before the public does. Profit with the smart money. Simple, accurate, and available on desktop and mobile devices. Test drive our IVSA chart now.
All right, welcome to another Friday chart clinic dating for 29th of August 2014. We are almost coming to the end of the month of August. And how's everyone portfolio been doing? How's your portfolio been doing? Bill is not with me yet. I did give him a call and he was going to update you about the Singapore update from the visit that he made, and definitely have something to share with you. I think those are, how many of you have received his, oh yeah, Bill is here. All right, Bill. Let me just test that. All right, Bill, are you there, Bill? Yep, Bill. Okay, yep, that's good. All right, Bill is with us now, and I'm just going to tell the agenda and I will get Bill to talk, okay? So I'll just mute Bill first, all right? Okay, the agenda for today was a couple of questions was posed to me. If anything that you want, now remember the Friday chart clinic, it's your program. It's not so much on my program. We'll just merely give you an update. So a lot of the audience who come in merely look-see, and looking for stocks. But you got to get involved. Once you get involved, you'll learn. And if you want to make money in the market, that's the only best way you can do it. We'll be talking a lot about stocks in general, and at some time we assume you have a bit of a knowledge. Those of you who don't have any knowledge about volume spread analysis, I recommend you to go to our website traderstruthreview.com. There is a free VSA e-course on the left hand side. Please register for that one. How many of you have registered for that one or don't know about it? Okay, how many of you don't know about the free VSA course that we offer to get you in sort of the right track? Okay, it's a very basic course, a basic introduction to VSA. How many of you don't know about that one? Right, so that course will put you in the right frame of mind and talk about things that we normally says in here, where we have some sort of assumption here. So in here, the question was posed by Alex from Singapore. So he wants to know about a view on SGX. I'm sure Bill can address this question next year. The allow of 100 units, I believe, is January 19, right? And will SGX move up in the long term? And there was another question posed by also one of our like members. When is the best time to enter the market? So I'm just going to address that after Bill make his comment. Okay, so I'll pass the mic back to Bill. Bill, you ready, Bill? Bill, you there? You ready to go? Bill, are you there, Bill? All right. All right, Bill is ready to go. Okay, Bill, you go ahead. Go ahead, you can talk now. Talk about your Singapore visit, Bill. You got to speak up, Bill. Speak up, Bill.
Okay, good morning, everybody. Bill here. So I'd like to report on a business and short holiday that we took to Singapore last week. And the first thing I did when I got to Singapore is I bought a copy of the Edge, the Singapore Edge. And there was a headline there that I really liked. It was a great headline. It said, Thai Beverage, OCBC, Jardine CNC, and Supergroup will all trade ex-dividend this week. So there's not just those. Also, Comfort Grow just traded ex-dividend. So this is something that really makes me happy when I see my dividends coming in. So now, right now, the market, the environment in the market, we find a lot of fear, a lot of doom and gloom people. Market's going to crash, all of this. Well, if we look more objectively, we find that Singapore, Malaysia, most of the world, interest rates are very low. So retirees cannot get any income from money market funds or tiny income or bonds. So they're turning to dividend stocks. Now, that, in my opinion, is what will support the market unless they start raising interest rates. So until that happens, I would say that for the next few months, we're going to see money going into quality shares. And obviously, some of them were SGX, Raffles Medical, OCBC, Thai Beverage, those kind of shares. And also REITs. Now, the average REIT in Singapore trades at a yield of over 6%. Now, that's a great return. And one of the requirements of Singapore REITs is that they return 90% of the rentals to the shareholders. So it's a steady stream of income. Now, the main reason I did go to Singapore was not to enjoy the pandas at the zoo, although that's a good thing to see. It was to attend a REIT seminar by a guy named Kenny Lowe, who's a very prominent REITs investor. And he also runs a blog there on the market, on REITs. And he focused on some of the reasons why REITs should perform well in the next few months. They've come down a lot, they've recovered a bit, but they should continue to move ahead for these simple reasons that what are the alternatives for retirees? Where do they put their money at? I think the interest rate is less than 0.5% for the money markets in Singapore. So here you can get 6%. So this is what will support them over the next few months. He also recommended the sectors that we should be involved in. One thing he likes are the retail REITs, retail shopping mall REITs. Why? Because those are the ones that the average Joe goes to. And also he likes hospital REITs. It's very defensive. People, when they get sick, are not going to bargain the price. They'll pay up. And also, he likes the hospitality REITs. And what has happened, this is providing really a good entry point at this time. They had a weak first quarter. Tourist arrivals dropped. So obviously, hospitality REITs were sold down a bit. Now, however, he feels that this will pick up in the next quarter. Why? A lower supply of new hotel rooms. And my God, when we were there, it is not easy to find a quality hotel at a reasonable price. And a lot of businessmen are coming to Singapore. It's still the focus of business for Asia. And Singapore being a small island, there's just a limited supply of land and a shortage of hotel rooms. The hotel we stayed in was 3-star, and it was absolutely full house. A lot of businessmen were there from Asia, from Europe, and so on. The other thing that will benefit the hospitality REITs are the recent opening of the Singapore Sports Hub. This will attract more visitors, needs for more hotel rooms. And the other thing, from Indonesia, we've had a stabilization of the rupiah. So that means a lot of Indonesian businessmen are coming into Singapore. So we will see the fundamentals. The thing that we look at when we invest in a hospitality REIT are the RevPAR. That's the revenue that each room provides. And we see a very steady uptrend. This is from InvestorDigest.com. A very steady uptrend of revenue growth, RevPAR growth. So that will benefit the hospitality REITs. And so, this is the issue. He also mentioned, Kenny, to avoid industrial REITs. And the reason is because the costs of running a factory in Singapore have escalated a lot. And of course, the cost of workers. So it means that the industrial REITs have a hard time raising the rents, because if they do, the factory will just close up and move to Malaysia or Thailand or Cambodia. So that means they cannot really raise the rents too much, or they'll drive business away. So he doesn't see really growth there. He also says the luxury malls REITs you should avoid, because there has been a drop in the Chinese visitors. Not so much the business people, but the politicians who have large amounts of money, and the Chinese government is cracking down on that. I mean, even Marina Bay Sands, we went there, which is a very high-end mall, and we find a number of shops are closing. Traffic is down. This was like the Rolex shop, the Hermes bag shop, these kind of places. The only shops that were doing all right were the restaurants. So in that sense, we avoid the luxury REITs. We deal in the ordinary Joe, average Joe kind of REIT. So the other issue is that REITs are slow. Yes, they don't have much growth. However, the hospitality REITs and some of the others have good swing freedom, so they have a potential of getting capital gain plus the income. And the other thing is they are very defensive. In the crash of 2008, 2009, all the markets went down all over the world. But there's one thing that remained stable. The REITs did not lower their dividends during the market crash, so investors did have a stable flow of income. So having said that, I do find there's a lot of negative sentiment, a lot of complacency perhaps, a lot of fear in the Singapore market. That's why the Singapore market has underperformed other Asian markets. The PE is only 13.6 for the SGX. KLSE now is about 18.6. The average yield of SGX shares are among the highest in Asia. It's about 4.2%. And because of the low interest rate environment, and I think low interest rates will continue at least through November, perhaps going into 2015, elections coming in the US. So in that sense, it's very, very well supported in quality Singapore shares. Those shares in Singapore that do not pay dividends, yes, there is risk. I would avoid those. So focus on the high dividend paying shares, which Martin and I focus on for our portfolios. That will protect us should there be some kind of panic or sell down. But overall, I think the KLSE is trading at very, very high multiples now. So the potential for upside is limited, while downside can be a lot more. In Singapore is not the case. And the other benefit is the I would say you have room. You have room for appreciation here. And it's always a good time to be as a value investor. You buy. It's maybe the market sentiment is bad. However, that is where value is, and buying value is a good, I would say, a good strategy when the negative sentiment is out there. I find the Singaporeans are very negative about their market. Most of them, unlike in Malaysia where everybody is so bullish. So that's an opportunity when you have negative news flow. That's the time to buy value at a discount, and I think there is a discount there. The Singapore business model is not going away. A lot of investors are coming there, taking advantage of the opportunity, buying at a little bit cheaper rates. So in any case, that's what I have to say about Singapore. And I would say going down there, I see for myself what is going on. And I did check. We do hold one hospitality REIT for some of our clients. So I visited 2 of their hotels there, and both of them are doing very well and very high occupancy rates. So the revenue is there. So having said that, I do wish you guys well in the upcoming week. And do consider to, if you don't have it already, open a global wrap account with us and consider to put some Singapore shares in your portfolio. We have some really good shares. We have an excellent portfolio. We have a portfolio of REITs that will diversify the risk. And so that way we're protected and collecting some very nice income to boot. So having said that, I wish you well next week, and goodbye.
All right, that was okay. Just mute Bill here first before I talk. Okay, that was Bill with his REITs outlook. Now, do remember, REITs is basically a play on the real estate. For those of you who want a bit on the real estate play, you can definitely do so, have some exposure to the Singapore market. It's a relatively stable income playing, and overall, we believe that you should have a little bit of exposure to REITs, in this case, Singapore, right? But do bear in mind with the uh, interest rate movement, there will be some volatility to that one. Okay, so let's go on to the questions that I have here, and there's another one on the forex one. I will comment that. Normally I just talk about it on our premium memberships. Okay, now the view that Alex did ask me here is, what is the view on the SGX market next year, allowing minimum buying 100 units? For those of you who don't know, Singapore has been traditionally trading in a lot size or broad lot size of 1,000 unit, so meaning it's going to be quite expensive for most people. And Malaysia initially was also 1,000 unit size, but since then has brought down to 100 units, and you've seen a lot. But what that also tell you is, when you have the lot size sort of been reduced, you get a lot of retailer coming in there, and partly that is done for the sake of attracting volume. I would think volume will come into the picture. On the long run, that doesn't really make much of a impact to the market. Means more retailer coming in, so you'll see a lot more volume. That's for sure on the smaller mid-size cap. This is what we're also seeing now in our KLCI. You can see there's been a surge of the interest on the small to mid cap stock, which is I've been talking a lot on our premium membership closing bell session. A lot of that you can see PDZ, Sumatec, all this has gained a lot of interest over the past 2 to 3 months with that, and I do see this also happening. What will also happen is the usual SGX trader that normally gravitates to the Malaysian market. They play the Malaysian market. Now they will probably move back to the SGX market. So it will have an impact on the Malaysian market, because the same player may only have so much. So if they play the Singapore market, because of the lower unit size to 100, that will also impact the Malaysian. Because traditionally on the 1980s, when we have the cloth together with the KLSC and the club, where they were in the same exchange, a lot of the small retailer sectors were coming from Singapore, because in Malaysia stocks can really move up a lot. I mean, you look at Takaso, just move up a lot, and that one has gone almost 200% since then. And there was a lot of query, and then the market since came down a bit. Okay, so that's the question. Now, when is the best time to enter the market? That was a question posed to me. Now, the question I'm going to ask you, are you trading or investing? Okay, it all depending. If you look in terms of the stock market, let me just show you this question here. The market has always been going higher. If you're investing, let's go back here to yearly chart. Okay, if you're going back to 1977, the market has always been going up. Yeah, in here back to 1977, we start off at 200. Now we're about 1,800, and the same if you do the same with US Dow Jones. So when is the best time to enter market? It's now. Okay, a lot of people are not knowing, and again, remember, they don't understand. When you go in, you must have the mind at, are you a trader, a speculator, or investor? All right, that is must be straightened out front. Do I say this makes sense to you? Okay. Do I say this makes sense to you? Okay. All right. Most people come into the market want to make money. Okay. Now the question is, they want to make 10% a month, 10% a year, or 20% a day. You see, that is important, because you have to understand your risk tolerance. If you're longer term, like I do, at the same time can a bit of short term, you can play both sides of the market. Invest on high quality blue chip, like what Bill talks about the REITs on the longer terms in Singapore. For longer term, as you can see, the market move higher. And for those of you who use a shorter trading period, you can use the iVSAchart and also our iVSA Pro version that we are launching next week. Oh, by the way, next Tuesday, okay, just note, right, we hope you have received our iVSA Pro launch presentation, okay? That's the crucial. We are launching it next week, and there'll be a lot of goodies for that one. So make sure you don't miss it. How many of you know about the iVSA Pro version launching next Tuesday? Okay, 8:30. The invitation has been sent out. If you have not got the invitation, let me know, and we'll send it out again. How many of you don't know about the iVSA Pro version? We've been promoting this on our site for the last 2-3 months since we showcased the first light version back in June, and we are coming up with this one. Okay, I think most of you, the regular names that have seen here, and a lot of you would probably know about this. Make sure you registered for the iVSA Pro version. If you don't, just send us an email and we will send you one here, right? So now I will go on to the stocks that we're going to be analyzing. MayBank. Okay, let's look at MayBank for that purpose. Okay, this is the IVSA chart. Oh, I got one. This is a Borneo oil. Let's look at Borneo oil since I'm the same thing. This is Borneo oil. Borneo oil have really dipped down. There was only one sign of strength in here. You have to be buying when you comes up to when you want to see more signs of strength in here. So there's only one in here. I wouldn't want to go in now. I want to see a few more in here. Else, Borneo oil is still going on the downtrend. Okay, find more sign of strength. This is what I'll talk about. Now you go on to MayBank. Okay, MayBank is this one here, 1155, right? You can get this. This is a nice one. You can see MayBank is really holding up its base around $10. It's a good time to buy MayBank. Okay. Compare MayBank to Public Bank. I would prefer MayBank because of the lower valuation. Public Bank is overpriced. Okay, it's overpriced, although it has quality compared to most other banks because of the credit rating. Public Bank is still hovering between 1920, 1914. There's only one sign of strength. Get a few more of this. And the last round in June, they had a good quarterly earnings. Come September, there'll be another quarterly earnings again. But I do see Public Bank will come out with a stellar performance, and that will probably shoot up back to $19.60. Okay. Next one that we have is Singapore market. I don't have IVSA for Singapore market yet, but it will be coming up in the first quarter 2015. But before we go there, let's look at Gamuda Warren. Okay, Gamuda Warren will be this one here, I believe. That's a CMB Warren. This is okay. This one has gone up a lot. Okay, continue to go up. I prefer normally buy at a pullback. So you can see here there was a pullback, and let's look at a percentage scale here. You can see that this one has gone up between somewhere like from here 0 to 12%. Nice one. Wait for pullback. It did have a pullback here. 8 cents in here. Maybe buy around here. This is a good price. Okay, if you want to get it around 220 here, and a stop loss around maybe 210. So it's just a small stops. Next one we have on list is MBank. Okay, MBank, A and MB. MBank is A and B, not this one. This is a Warren. Okay, let's look at another one. 1015.kl. Now this is a MBank. It fell down. I think there was a miss on one of the earnings, I believe, which has been released now because it's coming up to September here. So that one has dipped down. Let's look at today. I wonder what is it showing today here. Okay, KLCI. MBank. There you go. Still doing the same. So is it a good time to buy MBank? I will wait for the dust to settle first for start before I jump in and buy MBank. Right, it probably missed a quarter. I think this is also reacting to MBank selling the M Fraser in Singapore because it does indicate that they are not interested in the regional expansion. So anytime when bad news is out, a market will take a beating on rumors. So that's what is breaking up. Before you want to accumulate, look for green arrow first. 1, 2, 3, 4. So wait for those first before you actually buy them. All right. Next one that we have, oh, that's all we got. Borneo. Oh, let's look at Public Bank. We did. Now let's look at SGX, okay, and Raffles Medical. That'll be on the Singapore market. I'll bring this up on SGX here. Oh, Thai Ridge breakup. Hey, that's nice. I have this for my client's portfolio. That's something. That's yesterday, isn't it? Let's refresh it today. It's new one, 71 cents. Well, it's about time anyway. Thai Ridge, very good. Okay, next one that we have here is SG. No, S. What was the code here again? R01. SIR01. Raffles daily. This is nice. Actually, I like this. You got a spring here, lots of tests. Buy if you just take out the old high around 404. Learn to buy around here 404. That's pretty good, Alex. This is a nice one, Raffles. It's just waiting for result before it breaks higher. Very similar to Thai Ridge. Did you get Thai Ridge? I hope you got some Thai Ridge. Comfort Agro broke up to Costco. Okay. Singapore doing well actually. A lot of potential. Yeah. This is a nice one. Thai Ridge gone up a bit. Okay. So next one I have on the list here is SGX. SGX is that was one of my stock pick early on. SGX. I need to know the code of SGX. I have it here. Yeah, S68. Okay, SIS68. Okay, went up high to 735, still holding it. There's no really sign of a weakness in here, not that I can see. Of lower volume, that's okay. A little bit of profit taking. Other than that, still gonna move sideways. Okay, I'll take one or two more stocks if you want me to look at. Else, we probably call it the day, and I'll see you guys on our premium section this evening at 4:15 for our closing bells. Okay. Hold it. Okay, want to look at hold it. Okay. Warren B. I need to get the code first. I'll just comment the mother share. Okay. I'll go back to IVSA here. Okay. Hold it. Okay. Hold it has broken down the 50-day moving average here. So that means the market is going to come back down very quickly here. Around for 24, 22 cents in here. Okay. Again, this one is an investing stock. It's not so much of a trading stock. Decide what you want to do with it first. Okay. For us, we bought it around 30 over cents for the mother. Let's look at the mother share. That's the easiest. Okay, you can see it's still holding up the 50-day moving average. That was a nice one here, around 35, 36 cents. We bought around here, and since then it's moved up. But the fundamental didn't change for this, so we're just going to be holding on. But on the hold width side for the Warren has broken down. Okay. Okay, one more question here on Mike regarding about the US dollar and Sing dollar. I believe this is temporarily on a longer term. The Sing dollar and US dollar will appreciate against the ringgit, because now remember this is partly also reacting to a better GDP growth for the second quarter 2014 at a 6.4%, and Singapore has a lower GDP for that matter. So when is a good time to buy US dollar and Sing dollar? I think I would think now, because ringgit is definitely strengthened. Okay, we got a few more here. We probably look at quick one, very quick. Fitters. Fitters is nice. You can see here broke up new high. What price did you buy it? All right, what price did you buy it? Xiaoming. Okay, 130, which is we bought a bit high. Yeah, I think this one will move up. The nice one was actually here about 110, 115 in here. Let's hope so. Okay, go on. Next one is Po Huat. Okay, that's one of the stock pick that I have for Po Huat. Okay, nice one. Broke up the new high. This is also my stock pick, right? Yeah, I think so too. It's also on my Capital TV pick last week, somewhere around here. And so it breaks higher. Good. Okay, this is one of the better ones. Okay, you can see that's why I really recommend people to take a look at the IVSA. You can see lots of this strength really coming in here. 1, 2, 3, 4, and that's how the market will go higher. So it's as simple as that. Look at the arrow. It tells you signs of strength. Know where the market structure is, and that's the time to buy. And I think it's the time to buy Po Huat too. You know, you could have bought it a bit earlier on, around below 140, but it's still a good time. Okay, so that's all I have for the week, and Hopefully you're registered. Have you all registered for the IVSA presentation on 2nd of September? Okay. Have you registered for that one? That's free. You don't have to pay anything. Okay. There are some new faces in here. Gan. Mr. E, good to see you, Mr. E. Right, Vincent. Can't find the URL. The URL has been sent out. Okay. Make sure you are, if you have registered for the free VSA e-course, we would have received your email and we have sent out. Okay. Or you could have been a like member. We haven't sent out yet the like member. Probably send it out later in the afternoon. Okay. With that, I bid you a good evening. Sorry, a good afternoon. And I'll see you on our premium section. Our closing bell, we will review the stock pick that we had last week. Last week we picked Pasokan. That one did pretty well. Okay. Send me an email on IVSA. Hafiza, registered on our like members because we got thousands of members in there. I can't afford to send it over there. Okay, we will send the email out for the IVSA presentation today. So make sure you register for that one. Okay. Help us, help me register in our website on our like members subscription there, as well as register for our free VSA e-course, and we will send it out to you. Okay. A lot of time also please check your spam folder because it gets into that and I get a lot of rebound too. All right. Thanks a lot. I'll see you next week, next Tuesday for IVSA at 8:30. With that, I bid you a good afternoon. Thank you for listening. Bye bye.